Oh, we're not done yet. We're not done yet. One more video here this week. I got to make sure we get ready for next week, right? Got a big week coming next week after the holiday weekend. Welcome back, guys and gals. Thursday evening. Did you think you were done with me here this week? Got the day off tomorrow. Markets are closed tomorrow. That's all right. Let's get ready for next week's trading session. Get some money to make to pay for all those Easter eggs that we buy this weekend. Thursday evening is the 14th day of April 2022. My name is Joseph, and as always, welcome back. Welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for not tomorrow, kind of strange, not tomorrow. Markets are closed tomorrow, so setting up for next Monday's trading session. I got a great video for you guys and gals tonight. Charts are all ready in the background, as you can see. We got the S&P, we got the Nasdaq, and we got the black gold, the Texas tea. We got the crude oil futures locked and loaded for tonight's video newsletter. Got a bunch of great trades setting up for next week. I want to make sure you know how to start the week next week firmly in the green. And you know me, I'm going to make sure we talk about some curveballs, some traps to avoid, how to capitalize on those traps to stay out of trouble, whether you're trading on your own next week, you're trading with us next week in our trade room. Now, before we jump in, got a lot we're going to cover in this video here tonight. Don't forget, make sure you subscribe to our YouTube channel. I publish all the good stuff right here on this video newsletter, so make sure you subscribe. Hit that bell icon and set those notifications so you get notified next time I publish something new. That way you don't miss not tomorrow night's video, but next week's video newsletter. Also, if you guys have any questions here tonight, any questions, drop those questions in the comments section. I do personally go and answer those questions, so definitely don't be afraid to ask questions in the comments section. And I appreciate you guys tuning in, especially on a holiday weekend. The markets are closed. I appreciate having with me. If you enjoyed this video as much as I enjoy making it, hit that like button for me. Appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro, though. Let's get this thing going. Friday is right around the corner, but we are getting ready for Monday's trading session. Where's the money going to be on Monday? Where's the easy money going to be on Monday? Well, boy, we have quite a few big moves on these charts right now. You'll notice big move down on the S&P, big move down on the Nasdaq, big move up here on the crude oil. Now, boy, oh boy, we are in a very familiar territory here on the S&P and the Nasdaq. I thought about just posting last night's video once again tonight because it will be a little bit similar. All kidding aside, obviously we have some new stuff to talk about tonight, but we have a very bear market right now on the S&P and the Nasdaq, but it's kind of a flip, right? A 180 flip of last night's video where now we're sitting at major areas of support. Now, we're very bearish. We're definitely very bearish right now. I can certainly see some selling opportunities here, selling off resistance. But I mean, come on. And, we really see some great opportunities here right now to get some reversals off of these big lows. I also, of course, we get some wide open space down here. I would love some breakouts going lower. We have a ton of blue sky below us for breakouts on the Nasdaq and the S&P. So, man, I'll tell you, selling pullbacks, trading reversals, trading some breakouts. Monday is shaping up to be a pretty exciting day here. I'm looking forward to it, right? Do we have to have the weekend? I'm trying to figure out what to do tomorrow with all my free time tomorrow. I'll kid with you. The S&P, of course, right? The crude oil, nice and bullish here right now on crude oil. There were some headlines that came out this afternoon about the banning or the boycotting of Russian oil. That sends this market spiking higher. Whenever we have a really big move in one direction, there are let's say three specific scenarios. Two of them, and we'll add a bonus on there, that you need to be ready for next week. So if you're an oil trader like we are in our trade room, three different scenarios. We'll talk about that. You probably know a couple of them already. I'm going to toss a few more in there, though, so you guys are ready to make some money on that oil on Monday. Now, speaking of Monday, let's not forget about the game plan for tomorrow. I realize that most of the economic calendars are not showing this, but tomorrow the markets are closed. There is actually news tomorrow. You probably will see headlines coming out tomorrow, but as far as the stock markets, bond markets, futures markets, I think any all the kind of the serious markets. I want to say Forex probably still open. Crypto's open. They're always open, those crazies over crypto, right? But we know the majority of the financial markets are going to be closed tomorrow as we go into Easter weekend. And I believe, and correct me if I'm wrong in the comment section, but here in the U.S., we don't celebrate Easter on Monday. So we celebrate Easter on Sunday. But I believe, places in Europe and all over the place in Asia are actually celebrate on Monday. So for many of you guys, you may have a real long weekend ahead of you. So we'll be back on Monday, be trading our trade on Monday morning. Markets though are closed tomorrow. And I'll tell you, besides New Year's Day, Christmas Day, and Good Friday, I can't think of any other day during the year where the markets are completely closed. All the other holidays, even Thanksgiving Day, you can trade. It may not be that easy, but, you can trade. So it'll definitely be a bit of a weird day tomorrow. Being at my desk tomorrow, I got some stuff to work on around the office tomorrow for students here at School of Trade. But markets are closed tomorrow. As we come back on Monday, we get some more Fed speakers scheduled on Monday. We get some housing starts on Monday at 10 a.m. Eastern time. So we do have some news on Monday. But keep in mind though, when Friday, when the markets are closed on Friday, get a long weekend, any headlines, any news updates. We heard about Twitter this morning, right? Elon Musk making they're calling it a takeover bid, right? It's an offer to buy Twitter, right? That came out today. Who knows? By the time we come back on Monday, Twitter might be called Musk at that point. I don't know. I'm kidding with you, obviously. But that is some new headlines coming out here. Will we hear any commentary out of Ukraine over the weekend? Will we hear Fed speakers next week? Will this offer from regarding the purchase of Twitter? Will there be other companies that come in and buy? These are things that we definitely be watching over the weekend. So you can imagine as we come back next week, a lot of the news that happens in the next 3 days are going to play right into it. And obviously my crystal ball doesn't go that far into the future just yet. So we'll have to see what we get here over the weekend. But definitely keeping our eyes on the usual stuff, the Fed, and of course all of the, let's talk about inflation and things like that as we come back into next week. And of course we'll be in our trade room on Monday morning at 8 o'clock Eastern time. Back to our charts here right now. Now we've got the S&P, the Nasdaq, and the crude oil all locked and loaded here for tonight. Now, guys, whether you trade one of these markets, great place to start your career, one market at a time, or maybe you trade all of these markets like we do in our trade room every morning, you're going to learn something new throughout this entire video here tonight. I'm going to cover all my favorite trades, setting up for, again, not for tomorrow, right, but for Monday's trading session. I'll cover all my favorite trades, all the stuff I'm looking for on Monday throughout the entire video. I'll provide different trade variations, different lessons to learn, different money-making opportunities throughout the entire lesson tonight. And you know me, I do like to keep the best stuff till last, so I'll definitely give you a reason to stick around and put up with me all the way to the end of this video. So make sure you watch all the way to the end for the good stuff as we get closer to the end of this video lesson. All right, let's get right into it though. S&P, NASDAQ, crude oil. Let's grab the S&P first. What's the situation right now on the S&P? What would I say is the most important thing happening here on the E-mini? Well, first of all, you can definitely see we're bearish. There's no doubt about that. The bears completed their measured move as we usually see. First leg, third leg are symmetrical. So we're definitely bearish here right now. That is one very important part of this. It's a pretty strong move down as well. Why is that important? Well, because anytime we see a real strong move in one direction, we usually get another leg in the same direction. So when we see a strong move in one direction, we have to anticipate there are going to be some bears coming in and trying to run this thing going lower here. So it's definitely bearish, right? The bears would love to sell that next pullback here off some areas of resistance up overhead. But what else do we have going on right now? We have another inside day today. Basically the entire range today. I guess it was just a little bit outside yesterday's range, but pretty much though, not a lot has changed since last night in the sense that we're pretty much just kind of rolling around inside of this range here right now. So we're definitely bearish, but we're kind of the carbon opposite, right? The kind of the flip of yesterday, where yesterday we found ourselves very bullish at resistance, and we talk about shorting it back down again. This is the exact opposite. Same idea. We're very bearish, but you'll notice we are right into those lows here. Now, as I mentioned before, you can see, look at the wide open space that we have below us. I mean, there's like a football field size space down here. 43.26 is that next big area. So obviously sellers would love to get into this open space and enjoy themselves down there a little bit. And of course, the buyers would love to get this thing going right back up into this, into this range here above us. So we have a pretty good idea of kind of what to expect. It'll be a lot of similar type of strategy that we talked about in last night's video. The bears want to sell the pullbacks here right now. The buyers are hoping that pullback will continue and turn into a reversal. The buyers would love to buy a double bottom reversal here as well. And the sellers would love to trade a breakout going lower. I would also, of course, keep an eye on a shallow pullback here with that little small sell zone there as well. All right, let's talk about the up, down, sideways. The markets only move in three ways, right? They go up, they go down, and they go sideways here. Let's talk about a pullback here right now. What you want in this situation, because of the overall context, is that as the market pulls back, there are really two types of kind of scenarios that I'll be looking for tomorrow, or pardon me if I say tomorrow a few times tonight. What I'm looking for on Monday, it's kind of automatic at this point. So I want to see a pullback here up into some areas of resistance. And then because of the range overall, at this point, we're going to use that 2 try failure pattern, that 1, that 2, try to get these buyers to try to send this thing higher. They might be successful with that. But the reality is if those buyers try twice now, again, we have all of that momentum going lower here. So we know, again, anytime we see a strong move in that direction, they're going to want to retest that low. I don't want to be too aggressive selling it because of where we're coming out of. So on this pullback, now we look for those buyers to come in, let them try once, let them try twice, and now think about where their stops are. Right? All of the buyers here who are now trying to send this thing higher in the face of that really strong move down, their stops now are sitting right below that low, and we can use what I call a 2 try failure setup to run those stops, use those stops basically as fuel to send this market right back down to retest that low. I love those two. I love failure patterns overall, but a 2 try failure is great in this particular situation. If we weren't at a major support level, I wouldn't be so hesitant. I would just use a 1 try failure and hit it right back down to that low. You'll see an example of that on the crude oil as we go deeper into this video. Now, here's something else that you want to kind of think about too, is as the market begins to push higher, we may turn into, for example, one of those reversal patterns that we always talk about. So there's 2 of them that really come to mind right now. We'll cover a couple of them here. We'll cover a few on the Nasdaq as well. One that really stands out here right now is that pop and grind. The pop and grind is really the one that you're going to probably see most common in these types of scenarios where we're sitting at a big major low, a big range low down here. A pop and grind will look like this. It'll pop up obviously, but then as the market pulls back, it'll start to kind of flutter higher. And when it flutters higher like this, all that tells you is that all the sellers who are in, they're now walking away from this. It flutters like that. It flutters like that because of a short squeeze. It's the sellers getting out. The buyers aren't buying these little shallow pullbacks. These are bears simply getting out of their positions. So when I see that pop and grind, that pop and kind of flutter higher like that, where it grinds up like that, this becomes a really, really good trade for the long side now, because now I can mark up that high, nice and tight off those highs. I can mark off the big low, find a hidden channel. And now the money is going to be right off that first test off that channel. Now, ideally what I want is I want to see that pullback down to the low of that channel. And I like to look left and find those prior swings. Because if I can get under a prior swing, then I have really kind of the pick of the litter, as they say, as far as the setups go. For example, I can grab a trap setup. I can look for sellers to come in and try to short off that moving average. I can trap them in with a failure pattern, and then I can use a failure into pullback combination. Okay, so again, if we see that pop and that grind, again, the grind is an easy giveaway. Now, draw that trend line, find it anchored off that low, look to find some prior swings, grab that trap setup, grab that failure setup, and then that pullback combination. Now, guys and gals, I know a lot of you have already taken the free trading classes here at School of Trade. You've learned all the setups. I got so many emails this week from people using the material, using the setups from the free trading course to make their money on their own. I was just, it made me smile this week. So thank you so much for sending me your feedback and sending me your charts. And I had so many great emails this week of you guys making a killing on these setups this week. Now, if you're here for the first time, if you're one of the few folks that are not using that free trading course yet to make some money in these markets, what I'll do is I'll put a little pop-up there. Grab that little pop-up, take the free trading course, learn the entry setups. I'll teach all the rules. That way you know when to take them, when to skip them. I have hundreds of examples of the setups in the free trading course. That way you can apply them on your own trade and make some money. And that way also too, so you're ready for trading with us when you come out and join us and trade with us as a student in our trade room. So grab that link up there. If you're sick of missing the best trades, or you're taking too many losses, or you want a roadmap to transition from part-time trading into full-time trading, that free course will definitely give you that roadmap that you need. So definitely grab that. There's one more kind of reversal pattern that I think is very likely on this. Why don't we talk about that though on the Nasdaq? Because the Nasdaq's going to be pretty similar to this. So we'll cover some more breakouts. Some more reversals here on the Nasdaq as well. So make sure you keep on watching on that. How would I buy it as it goes lower? What do you think's the way to do this as it goes lower here? Well, really, ideally, what you want here is we'd like to get a double bottom at this low. Okay, remember when we talked about this last night, anytime we have a really strong move, we have to anticipate we're going to probably see a retest of that low. Then we can start looking for that nice rally going higher here. Here are two scenarios that you kind of want to think about or keep on your radar to buy a reversal on this. The first one is going to be kind of the home run or the dream come true setup. This is a setup we hope we get. Okay, we get a big move down. We're hoping that we're going to get those bears to come up and sell it back down to retest that low. Now, I want to rope in those bears. I want to let them try once, let them try twice, right into those lows. Now, remember the situation now. We have a very strong move down. We've already got the bears already in, and they've now taken their profit. Professionals have already made their money on that. These now are usually inexperienced rookie traders, small stops. They can't defend themselves, and they're selling right into a major turning point without any reason to do so. All those stops right now, those stops are gasoline now, right, for a reversal. So once those bears try a couple times, try twice, I try to imagine where their stops are. One of my favorite kind of entry techniques on this is to draw a trend line off of that low, look for a nice strong signal candle, closing above the moving average, and then hit that two-try failure. Now, that two-try failure that's just the beginning. That's just kind of the appetizer. The good stuff, the fun stuff comes afterwards. Once the market now spikes higher now draw a new channel off those two highs up there. Bring it down, find that low, and it's the same thing. Look left, find a prior swing. Ideally, I like to get under prior swings because that's usually where the best entries are going to be. Get under a prior swing, rope in those bears who are trying to sell short off the moving average. That becomes a trap, failure, pullback combination as we go higher, right? Again, it's a two-try failure after a retest, and then we've got that trap, failure, again, pullback combo as we make that roll back up, potentially all the way back to the highs of the range like we did today. All right. That's kind of the home run scenario. Now, what if we don't retest these lows? right? What if we don't come back and retest these lows? Let's cover that. Let's cover that setup. It's a little more advanced setup. Let's cover that one on the NASDAQ. Okay, so we'll talk about some more reversals on the NASDAQ. How about a breakout pattern, right? What would a breakout look like right now on the S&P? Okay, we're going to save some good stuff in the NASDAQ as well. What would a breakout look in the S&P? Remember, don't forget where you are. Okay, now here's one advantage for the S&P bears right now. There's only one area we have to break down, and then we have that big wide open space down below us around 43.26. So there's a couple different breakout patterns we can use on this. We'll cover a couple here, and we'll cover a couple more on the NASDAQ as well. I would imagine, again, think about this. We have to get through this area, right? We got to push right through this area. One breakout pattern, kind of the standard of a breakout pattern would be we take out that low, we pull back to the moving average, and we blast, right? That nice move lower. These are called 1, 2, 3 breakout patterns. Once we see that blast going lower, remember, I'm not going to sell that first pullback, because at that point I'm looking for those bears to fail so I can buy it back up again, right? That's the better trade right now. If we do get that blast going through though, now I mark up that low, I mark up that high, I find those prior swings, I try to get above those prior swings, and again, rope in those buyers above the EMA and look for that next leg lower. Okay, so you want to think about that 1, 2, 3 breakout pattern and then grab that first test off the high of that channel. And again, I'm just simply drawing on the screen right now, but you'll see a lot of examples of those trap failure pullback combos in that free class I mentioned, linked up in the upper right hand corner. All right, here's another one. Here's another one I would definitely keep in mind as well. Let's say we pull back here and we really blast down here. One of my favorite breakout patterns called a 2-try breakout. Strong move, shallow pullback, lower low in price, traps, baby. One of my favorite breakouts right now, this 2-try breakout pattern. Remember, we still got to push through this area, right? Got to push right on through it. If I get a strong move down, a shallow pullback, and a lower low in price, that 2-try trap is a money trade. Very, very good trade. We saw one of those this afternoon on the NASDAQ. You'll see that here in a moment. So a few new breakout patterns, we go. And you probably notice too, if we can find a channel involved there, absolutely combine that channel too. It's always more the merrier as far as that level of resistance goes as we go. I got a couple more breakout patterns though I want to talk about here tonight. Let's keep going though. But now you guys have kind of an idea of how I want to buy it, how I want to sell it here on the S&P. Should we go to the NASDAQ? Let's go to the NASDAQ now. Got a couple more I want to talk about here on the NASDAQ. What's the key on the NASDAQ? Bears have control. Really almost nothing different here on the NASDAQ than the S&P, right? Bears have control, but we're sitting right at a major area of support. Same basic idea. We've been kind of inside these ranges. We're rotating back and forth. It makes logical sense for this market now to want to rotate back up and retest those highs. One difference you can see here on the NQ is that we have a definite secondary level just below us at this 13,858. So we have to break through that area too. If we can get that breakout, then we got plenty of blue skies below us here. 13,519 is that next big objective here for the NASDAQ. And if you were watching earlier this week, again, I'll say it again, we pretty much, if you look at like a weekly chart right now in the NASDAQ, we pretty much have a bullseye right there at 13,000 on the NQ. We've been slowly working our way there pretty much the entire month. So we're definitely bearish on this, but again, very similar to what we saw on the S&P. Not really a great place to want to sell right now. Again, bears have control, but we have to either get a pullback or really a breakout before we can really start to think about, being a seller on this market. Now, we already talked about a lot of this on the S&P. We talked about that pullback, get up into an area of resistance. We try to get these buyers to try to send it higher, let them try once, let them try twice, sell into those stops for that retest of that low. We also talked about how if the market was to pop and start to grind going higher, that would be a great option. I love that reversal, right? That pop and grind reversal underneath that prior swing. That will get us underneath the moving average. Bears come in and try to sell the moving average short. They're foolish bears, though. We've already turned over at this point now, and they can look for that trap, failure, and then pull back combo as we go. Where do the buyers want to go right now? They want to go back up to the other side of that trading range. How about if we go above the moving average, we pull back, the buyers come in and they do one of these where they go 1, 2, 3. What do we do then? 1, 2, blast, right? Instead of the buyers struggling and us selling to fail, what if the buyers now hold that pullback? What if they hold that pullback now and they blast going higher? This is that 1, 2, 3. We called it a breakout before. 1, 2, 3 reversal at this point now. What do? Do you chase it? No. You mark up that high. You mark up that low. You look left, you drill down, you find those prior swings, and you grab that. What do we always say? The first test is the best test. I want the first test off that new channel. Does that make sense when I say that? Right? I'm connecting these highs. Bring it down to that low. This is like it's like a virgin level, right? It hasn't been hit yet. So now as we go lower here now, again, I'd love to get that trap, but let's say we don't get that trap. We may not get that trap. There's a lot of times we don't get the trap. We get below the moving average, though, and we watch those bears. It's amazing how many times they try to sell it. And so once they try to get short, we're already bullish now. We've already turned off the moving average, right? Once those buyers jump off the moving average, buyers take control. Just like once the sellers jump off the moving average, the sellers take control, right? Makes sense? So buyers have control. Why are we selling right there? Well, I shouldn't say that. I hope they keep doing it because it really does well with a failure into a pullback combination. Now remember, an easy way to kind of fine tune your targets here is the first leg is oftentimes equal to the third leg. So again, we have a pretty good idea of kind of where this market wants to go. We got a pretty good idea there. But think about now that first leg and the third leg are usually pretty symmetrical, like we saw there on the S&P a little bit earlier here today. So a couple easy ways for us to buy it as it goes. Or maybe something happened. Remember, this is the Nasdaq. We were joking around earlier about Elon Musk, making an offer to buy Twitter. Who knows what happens this weekend? Maybe something happens and the market loves it. I don't know what it might be, right? Maybe it jumps up here now. Really strong move. Anytime we see a real strong move in one direction, I always perk up because I look for that strong move, that shallow pullback. In this case, the higher high, and that trap. Right? Love these reversals. These are great setups. Okay? The strong move gets the momentum going. The shallow pullback means nobody can get in. The higher high confirms it's not just a V-top. It's that little bit of confirmation. That trap, it's kind of a must-take trade. Okay? Look over here, right? There's one right here, right there. See again, strong move down, shallow pullback, lower low in price. Repeat after me. Traps, baby. This is a great setup right there. That every professional, right, had their sell order ready to go. They probably had limit orders just sitting there to sell right into it above that high. That's the same exact pattern setup we're looking for over here, just in the opposite direction. Now, we also talked about in the S&P how if we get up and back down, we can look for a 1, 2, and we can buy that 2-try failure. That's the exact same scenario here on the Nasdaq. But what if we don't? What if we don't get that retest? Can I still buy this? I do think so. This on the Nasdaq does not look as strong as the S&P. The S&P just has this. You can see the S&P. S&P has this kind of blitz going lower here. That's a pretty strong move there on the E-mini. The Nasdaq, just not as strong. So I think there's more likelihood we may not get that second leg as quickly on the Nasdaq. How would I buy this, even though it's so bearish right now, if we don't see a retest of that low? What you need is a crown reversal. And here's what it look like. First of all, the bigger the move, okay? Here's an easy way to think about it. The bigger the stronger the momentum you're going against, the bigger this pattern needs to be. Okay, so if I have a really big move down and I'm trying to get a reversal before we retest that low, again, if we retest the low, it's much easier, because it allows all the bears to take their profit. They scratch their back and then we can go scratch out. You know what I mean? That's kind of the way it works. We see a strong move up, you want to see them retest and then 1, 2, and back down again. But if we don't get that retest, okay, and remember, because this is such a big move down, we don't want this to be a small pattern. The bigger the move you're trying to reverse, the bigger the battleship you're trying to turn around, the bigger the pattern's going to need to be to do that. So here's what it will look like. We still want to get those bears to try twice, but what you want to remember is the sellers are going to be waiting for it, most likely up around these areas. So what I don't want to do is try to, and again, remember, this is different than if we retest the low. If we retest the low, you can get much more aggressive. But think about it. If I have a strong move down and I get the bears trying twice, and I go in and I try to buy into stops right here, okay, what's likely to happen is I may see another round of bears coming in, selling again. Because again, it's such a big move down, and as we get higher, you're running into more supply. More sellers are coming in to that market. So that's the danger of just buying it with a two-try failure when you're going against such a big move like this. We talked about this actually today in the trade room. In these situations, what are you going to do? What's the biggest threat? The biggest threat is you've got bears are lingering up here, right? Because they want to sell high, and it's such a strong move down. So the best way to avoid that problem is to grab a trap. And a trap allows you to get into that trade at a place where you're not having, that way you're already making your money at that point. So if the bears come in and hit it again, okay, didn't make as much as I wanted, but at least I'm not buying way up here and getting smoked on that what is expected to be a retest of that low. All right, does that make sense? Can I get a hashtag light bulb moment in the comment section? Get a thumbs up for that. This is a really important part of it. So strong move down, retest 1, 2. You can get aggressive with that, right? You can buy relatively high in that because you've already got the bears have already committed. They've already spent their ammunition. There's nothing left up there to sell. Okay, but if we don't have that retest, then it's 1, 2, you really want that. You want to try to buy as low as you can. That way, when you get into that trade, you're already making the green by the time the bears come back and try to go again. And a lot of times they won't be able to. A lot of times there'll be so many buyers that buy that trap, the market will just shoot higher, spit higher, and then once you start to see it turn over like that, once it starts to turn like that, that's when okay, now mark up that new channel, find that new channel low, look left, and again, grab that first test off of that low. And we talk about this all the time in the trade room. If you don't get the setup or you don't have the confidence to take that reversal trade, that's fine, but you have to take that first pullback. The pullback is one of those it's your job type of things. You got to take that first pullback. That's what we get paid to take as traders. All right, you'll get to the point where you get that crown reversal, and you'll get good at that crown reversal. But if you don't get it, or you don't see it, or again, sometimes it just bounces and reverses, then that first pullback is the one you really got to take it, right? And then of course, as we go lower here, if we go lower, we've already talked about the 1, 2, 3 breakdown. Again, this one though, remember, it's not just the low of the range from this week; it's the low of that. It's that 13,818. So we have to take out that area. We have to hold that pullback, right? And then blast. And if we can get that 1, 2, 3 breakdown, now mark that low, mark that high. Again, I'm simplifying this at this point, obviously, but you want whichever one of the entry setups we can get off the top of that channel. I also, too, would anticipate, right, a pop and grind. Pop and grind. It's a holiday weekend. We might come out on Monday. Half the world's on break. The other half isn't. I got to work on Monday. A lot of you guys and gals may not have to work on Monday, right, because of the Easter weekend. We draw that new channel. Draw the trend line, find that channel anchored off the big high, get up, up into those highs, above the moving average, grab that trap, failure, pullback combo. Again, we'll know more once we get there on Monday. And we know where the market wants to go, obviously as it goes lower here. Now, I want to talk about what if we go into a range down here. Okay, and this goes for the S&P as well. What if we just spit lower on Sunday evening and go into a range down here? What do we do in that situation here with a trading range? Let's talk about that. How about some oil? You want to wrap things up on the oil right now? So breakouts, right? Breakouts are we're waiting to see breakouts here on the Nasdaq. How about some crude oil? Let's grab some oil, because if there's one market, again, not tomorrow, but on Monday, if there's one market on Monday that is ripe for a range, it is this one here on the crude oil. Now, real quickly about oil, you got to remember, this is we're right on rollover right now. So rollover is, we've got today, right? Today, if you recall from last night's video, we are watching rollover to the 622 contract. Right now, you'll see the volume on the 0522 was much higher for pretty much the entire day. But you can almost guarantee by the time we come back after Easter weekend on Monday, that 622 contract, which is, you can see, just a little bit below the 522, that will probably be the new contract month. You can see the prices are almost identical. That's usually how you know when it's time for rollover, when the prices have kind of come together a little bit. The volume is very close. So be aware of that. Monday, We'll double check on Monday, but it's looking like the writing's on the wall right now. We'll be trading that 622 contract on Monday as we go into, again, a rollover date, which I believe is scheduled for Monday as well. So we're looking at the possibility of 622 contract on Monday. What's the most important thing right now on the crude oil? On the oil right now, the most important thing is the strength and the size of this move going higher here. A pretty big move. It went from 102.5 to 107.5, a $5 move. It's a pretty big move. I realize that, lately these $5 moves have been pretty common, but historically they're not that common. So this is a pretty darn big move. Why is a big move important? Well, as I mentioned, there are two, but really I'll talk about three scenarios that you want to keep in mind for tomorrow. Whenever we see a really strong move like this, remember, anytime we see a strong move, we expect to see at least another leg to retest the high. This is the exact same reason why on the Nasdaq and the S&P, we don't want to be that aggressive buying off these lows until they retest that low. Okay, once they retest the high here on the crude, then we can start thinking about that move back down or another leg up, possibly up to 110, next big round number. So the first big clue right now in the oil is the strength of that move. It makes it very difficult to confidently or aggressively short this thing because we know that we're looking at, it doesn't matter what area of resistance could be up here, which, by the way, we're not really at any resistance here at 107.5. Okay, so even if I was at major resistance, like, all-time greatest level of resistance, I still really can't short this because of that strength. The second big clue is the size of this move. Anytime we have a big move in one direction, we always anticipate either a range or a deep pullback. Now, a range is very common, and judging the fact that oil went from one range and spiked up, it's rollover, you got to be ready for another range. Now, a range will happen up here because nobody dares to sell this thing because it's so darn bullish. At the same time, nobody wants to buy way up there because it's too damn high. Sorry the language, right? It's just the price is too high. So nobody wants to buy, nobody wants to sell, so it goes sideways. That's what creates a trading range. At the same time, what would attract buyers in this market? A deeper pullback. So that is the second likely scenario that we get on a very big move like this is a relatively deep pullback to attract more buyers. And so we might get both of them. We might see a range and a really deep pullback, but these are the two scenarios that you want to think about. And let's throw a bonus in here. I mentioned three scenarios. This move, what really came from, if you saw the headlines today, the EU disclosed they were going to start phasing out the purchase of Russian oil. A week ago, they talked about banning the use of Russian coal. Well, at first glance, it seems like, oh my goodness, this is a pretty big deal. But then you realize that Russian oil really does not, nobody really buys a lot of Russian oil. Most of the oil comes from other countries around the world. Russia definitely is an oil exporter, but it isn't a huge percentage. So there is a chance here, that this market may simply go, that wasn't that big of a deal, actually. We're way, okay, let's come back here. Go back into those range below us. Because remember, we mentioned this last night, we got this big juicy range down here. Back around this 103 to 101 area, there's a lot of overlapping candles, a lot of volume down here. There's a big range, and of course ranges, they act like magnets. So in the event that this becomes a big nothing burger, as they say these days, right? If it does become a big no issue, this market combined with rollover could easily fade right back down into that trading range. So we want to be ready for that, right? Let's get ready for it here right now. So first things first here would be the pullback, right? The pullback here. The pullback, I think, is pretty straightforward right now. It's a strong move up. So I think there are I would say there are probably three types of pullbacks that you want to be prepared for. One would be that nice deep pullback, into this area, into this area. I wouldn't go as far as going that area. We'll talk about that in a second, though. But I want to see a relatively good pullback here. I want to get underneath the moving average, and I want to see if I can get some bears to come in and try to sell it. If they come in and try to sell it right now, it's not a bear market, and there's no real reason to be short on this thing. Now, keep in mind, things can change. Again, one of the challenges we have tonight on this video is understanding that we've got Friday, Saturday, and Sunday in a very active geopolitical scene right now. So who knows what the world will look like on Monday morning or Sunday evening when it opens up. But assuming there haven't been any major changes in the current narrative, that those bears right there with that strong pop higher would love to get that failure into that pullback combination for that retest of that high. Buy into those stops of those sellers. Okay, grab that first pullback as we go higher. Let's say, for example, though, it really shoots lower, runs into this area here. Now what do we do then? This is exactly where you combine the two-try failure. Okay, now at this point, the strength of that move is taken back more than half of this move up. There's a greater chance now these bears get their hooks in this thing. There's a 100% chance they try harder to get their hooks in this thing. So you let them try once, you let them try twice. Okay, we're still a bull market at this point, so you don't need that trap. The trap would definitely not hurt, that's for sure. It wouldn't hurt whatsoever. You got a trap right there, right? You're not so much worried about the bears selling it again, but again, this would be a two-try failure and buying into those stops. Now, these two-try failures off these really deep pullbacks, these things love to snap back up. I would love to think I'm going to get that first pullback and add to the position. I would love to think we'll get that failure and that first pullback. But oftentimes on these really deep pullbacks, it's not the case. The market kind of shoots higher there, and all we can really grab now is that trap. Oftentimes that moving average won't be there in time. So look for that trap. Two-try failure on a deep pullback into that trap. Okay, you see the difference there? One is a modest pullback, failure, pullback combination. The other is a really deep pullback, 1, 2, failure into what usually becomes, because everybody gets out of their short positions, that trap setup on the follow-up, right? Back up to retest that high. I would also, too, keep in mind if we were to bounce up and then go back down. Okay, this does happen quite a bit. Draw a trend line off that high, get up and over and use it. Okay, keep your eyes on that trend line coming down. We talk quite a bit of that, by the way, in that free trading course. You'll see a lot of examples of what we call two-legged pullbacks, one leg and two leg. Okay, you see quite a few of those. You can see one right here. We go up, bears once, bears twice, draw that trend line over, and of course, the bounce off that trend line once it makes that low. That's a good example of it. Okay, so looking for that type of setup if we get that trend line coming down overhead. Okay, that'll give you an idea of kind of what to look for on the pullback. I would also say too, and this is also an option too, I would also say the next area of resistance isn't until 108.67. So what do you think the odds are that as we're pulling back here now, the bears try once, the bears try twice? Is this yes, it is. Because what do we know? We know that's a really strong move. We know it's almost a certainty they're going to want to retest that high. I also know I don't want to buy really high. I want to buy low as I can get in this situation. And so a trap on this would be ideal. Okay, so a shallow pullback is great for a trap setup. Okay, does that make sense? Those three types of pullbacks. Okay, because in all reality, it might just grind back up. That trap will be where the best money is made before that retest. Okay, and then of course from there, if we can get that retest going on, oh yeah, this is where the good stuff starts to come in. Because now if the buyers try a couple times, right? Buyers are trying to push this thing higher. They try once, they try twice. We've got now all their stops are sitting right below. This is the same exact situation we talked about in last night's video. I can sell that two-try failure, right? We go up, buyers once, buyers twice. They're buying right into those highs. The buyers of professionals are already in. They've already taken their profit. Who is buying into that high right now? Not the professionals, not that, right? Not the people with the big accounts that can defend themselves. These usually inexperienced traders who are doing it out of, impulse, right? So we know the stops they're right below that low, and I can now look to run those stops. And then, of course, as we get this move going lower, your job is not over yet. Don't go counting all that money yet. Let's add to it. Let's make that new channel. Let's mark up that right prior swing. Let's grab that trap off of that high. Trap, failure, pullback combo. And again, ranges acting like magnets down below. Okay, what about this? What if it pulls back? Okay, what if it pulls back and we jump off that moving average? What's that called? That's a 1, 2, 3 reversal. We're not buying that anymore, right? The minute this thing jumps off the moving average is the minute those bears take control. The minute that we jump off the moving average is the minute the buyers take control. Right now, the buyers have it. If they hold that pullback, the bears get it. We're going to mark off that low, mark off that high, look left, find those prior swings, and hit it. Okay, don't delay. That's a great short off that high. Or maybe on Sunday night, everybody realizes, wait a second, do the math. Wait a second, nobody cares about, that's only a very small portion. Why did this thing go up? Maybe it starts to sink lower, right? Maybe the world does the math here and realizes, you know what? Maybe it's not that big of a deal that they're not consuming Russian oil. Maybe it's not a big percentage. Maybe it sinks lower here now. It begins to grind. Right? And that grind, this is one of my favorite, this is just like that pop and grind on the E-minis. Okay, one of my favorite trades. Okay, one of my favorite reversals, right? Because now again, what's the difference on this? The difference is we shoot lower, the bears once, bears twice back up. Okay, the difference is we pop lower and we grind down. Right? I think that's pretty obvious. A pretty big difference there. Mark that low, mark that high. Find those traps, baby, right? And short those traps, okay? One more. How about a range? Okay, one more, and we'll wrap things up and head off to go hide some Easter eggs for the kids this weekend. One more here. A range, okay? And this will go for all three of these markets right now. In a bull market, if this thing starts going sideways here, okay, when these situations, you got to be prepared for it. There are three ways to make money with a trading range. One, this will be a bull bias. Apply the flip of this to the S&P and the Nasdaq. Okay, so if the S&P and the Nasdaq bury lower early on Monday morning, find that trading range. This will be just the flip of that. Okay, so bull market into a trading range. First thing we're going to do is find support levels below the range. Okay, and there's a lot of different ways to do this. We'll learn more of those details in that free video class, which, by the way, if you haven't grabbed it yet, what are you waiting for, right? Find support levels. Find support levels. Then eventually the buyers will run out of gas. Wait for it to pull back. Once it pulls back, get those rookies to come in and short it, right? Get them to commit off the moving average. Once they do, use those stops and buy into those stop losses. Okay? Think about it this way too. If it really goes lower, again, 1, 2 back up, right? You with me on this? How the strength of that pullback is important? Now, if we can get that failure going lower here, now what I'll do is grab that first test as we trade the turn. Now, the goal of this is you want to get that follow-up entry. And again, I'm simplifying this quite a bit right now for time's sake here, right? We grab the failure off that low. The market then pushes up, and we grab that first test off that channel. Your goal on this could be a trap, it could be a failure setup, it could be a pullback setup. Remember where this market wants to go. It wants to get back to the other side of that range. So the goal is you want to get that add-on entry ideally before we get back to the other side of that range. That'll make that trade almost bulletproof. Okay, so one way to do this is to buy the failure. The other is to buy that, as we say, trade the turn, as we're going back up into that trading range. Where's the third way to trade this? Well, what's a breakout look like? Make sure you measure the amount below the range, project that above the range, and that's your big target overhead. So target's going to be the top of the range. Target is the pendulum swing on the other side. Okay, and then from there, if we break through that pendulum swing, let's say this is your pendulum swing, we break through with a 1, 2, 3 breakout going higher, right? Let's say, for example, here, there's my trading range. We pull back, we get that failure, we mark up our pendulum, there's our level, we push up into it, the buyers come over, they hold the pullback, 1, 2, go. Okay, 1, 2, blast, 1, 2, 3 breakout, find that new channel, mark off that high, find that low, buy that first test. Or what is also very common are these slingshot breakouts, where all that momentum coming off of that low slingshots this market higher. It begins to float as it goes. You know how to trade these. Mark up that high, mark up that low, right? And without sounding too much like a broken record, traps, failures, and pullbacks off of that, right off of that low. Or it slingshots off the low, big old blast, big old blast going higher, strong move up, shallow pullback, higher high in price, traps, baby. That's a great breakout right there as well. Okay, and then one more, the fourth breakout is the breakout pullback, right? The breakout pullback. We think about where is that high right there. That area now becomes a key area of support. We go up, we get above that moving average, we pull back, we trap in the bears who are trying to short that moving average, and we trade a failure with a breakout pullback. Does that make sense? Right? It pops through the high. We look at that prior high. If it pulls back into that area, you're underneath the moving average. Trap in those bears like we do under the range. Use those stops as gasoline, pun definitely intended, for that next run higher. Where are we trying to go at that point? Probably 110. All right? There's plenty of ways to make money in a range. And again, you'll notice there are 4 different breakout setups. 1, 2, 3 breakouts, 2 try breakouts, pop and grind breakouts, breakout pullbacks. Whew! I'm getting excited. Are we sure the markets are closed tomorrow? Are we sure we can't make it happen or something like that? Call Elon Musk. I'm sure he can he buy the CME group or something too while he's at it? I'm kidding with you. I think we're the only people that don't like it when we can't go to work the next day, aren't we? Anyways, let's get out of here. Get some rest this weekend. Enjoy your Easter weekend. Don't forget, our trade room opens up again on Monday morning. If you're missing the best trades right now, if you're taking too many losses, if you're making too many mental mistakes, or maybe you're like me when I was a new trader and you need someone to work with. You know, I really had a hard time when I was a new trader because I had such bad anxiety. I didn't know what I was doing. I was losing money. I was all over the place. So, I have the entire roadmap all ready to go with all the worksheets, all the templates, everything you need. I just need you to get in there and start learning and earning and having fun with us in the trade room. We've talked about the game plan tonight. We're going to trade that game plan coming out Monday morning. I'm going to put all the membership links, all the free course links. I'll put all of that right in the description of the YouTube video. So grab those links in the description. I will be here all weekend. I'm not going anywhere. I may dress up as an Easter bunny on Sunday for a little bit, scare some kids next door. But I will be here, though. My cell phone will still ring, though, in the bunny suit, I'm sure. Call the office if you have any questions. I'd love to slow things down. Get serious about making sure you have all the tools, all the stuff you need so you're ready for trading with us in the trade room. So don't be afraid to call the office. Hit me up in the comments section if you guys have any questions. And I hope by now you subscribe to our channel. Hit that like button if you enjoyed it. And again, have yourself a fantastic Easter weekend. I'm glad we came back tonight and finished off the week here with a bang. Had a really good week. Looking forward to another one with you guys next week here on this video newsletter. So be well, be nice to each other. Don't eat too many chocolate eggs this weekend, and we'll see you guys on Monday, same time, same place, as always. My name is Joseph. Get out of here. Adios, amigos. Bye-bye for now.